taking a look at energy. It's amazing because energy is the best performer of the week. Your thoughts here?
Yeah, great to be back, Nicole, and thanks for having me again. If you think about it, we spoke 6 months ago, and we're pretty much back to square one of where we were before, which is oil prices are right around $40, and we have this rising level of coronavirus cases that previously we thought was abating, but now it seems like we're going to tick up again in number of cases. And even though we had the great news of the vaccine come out earlier this week, it does raise the question of what happens to demand later on going forward for energy, and specifically oil. So this is good news, what we've seen, especially this week, as you were mentioning, about what we've seen in the energy sector. But it does raise questions about how bullish should we be in this sector overall. Overall, we are saying that you should be a bit more defensive within energy because we expect volatility as part of the macro environment. So we like the pipelines specifically within this area. We just actually wrote about this on our blog this week about how we do expect in 2021 there is going to be eventually a recovery in the second half of the year, but we do expect some issues to tick up. Most notably in the first half of the year. And so we think investors should be defensively positioned. So we like pipelines, the reason being they are toll road models. Oil production has fallen from where it was pre-pandemic, but it is recovering slowly and slowly more so. And we do think the pipelines are more positioned to rebound from that. Whereas the exploration and production segment, it certainly will have some sort of a comeback, especially where valuations are today, but it may be a little less pronounced than other pockets of the market.
You mentioned using the word a little bit of caution here. Stay defensive in pipelines, you said, given some of the volatility in the space. And OPEC, from my understanding, is taking a little bit of a pause to try and help out Libya, right? So as an investor, I know you have an optimistic case for midstream. How should people go into energy if they want to?
Yeah, as you were saying, Nicole, there's been this big stop and start within oil prices. OPEC has had to step in to be supportive of the market, especially with the soft demand story. So volatility is going to happen over a longer period of time here over the next 6 to 12 months within the space, especially as more news about coronavirus starts picking up and we start seeing a second wave coming forward and then stops and starts with any potential vaccine here. That's going to add volatility into the energy space because it is highly cyclical. So we think play the longer term macro story of production is probably going to rise because oil prices are going to slowly move up from here. They'll be volatile, but they'll slowly move up. And as we were mentioning in some of our notes and also in the blog post that we recently put out describing the energy sector looking forward, we think upstream consolidation is going to happen within the exploration and production space. We do think as a lot of these balance sheets start to get stretched and debt becomes more in focus, that many of these companies are going to look at operational efficiencies, which they already have. If you look at companies like Noble Energy that was acquired by Chevron, and then the pending merger between Pioneer and Parsley, these are just microcosms of what we should expect going forward is a smaller E&P industry, but a more resilient one. And we think that's going to lead to higher CapEx spending, and that'll in turn lead to greater energy production for the U.S. energy industry.
Yeah, what about renewables and all of that? Do you have a thought there?
Yeah, I think as you were seeing with the Biden administration coming in and then any potential control of the House and Senate that we're seeing possibly moving forward with the Georgia runoff, clean energy is something that is being politicized a lot, but is also the wave moving forward. Now, how do these energy companies play it? I think many of them will ultimately shift towards clean energy. Certain companies, especially the integrated majors, have already laid out plans and their expectations of clean energy and the macro dynamics moving forward for that space. But they've also said, look, we're going to be a part of that because we have to be a part of that. So in the short to medium term, fossil fuels is not going to be heavily threatened. It will be more so from an optics standpoint, but less so from a fundamental standpoint. What will happen in the medium term is there will be a shift from oil towards natural gas, because natural gas is less dirty compared to traditional oil. And then over the next 20 to 30 years, there's going to be a shift away from natural gas towards solar and wind and some of those other cleaner energy sources. So this is not going to be something that's going to happen overnight. It's going to happen over a longer period. And we do think energy companies will ultimately participate in that transition. But I think what's been happening recently is, especially with this move towards ESG and clean energy, we've seen many investors not really give energy companies the benefit of the doubt, saying, we don't necessarily think you're there at this moment. We'd rather have you prove us wrong.